quarter. So we have the management joining us. Anil Rai Gupta, CMD of Havells, is with us. Anil, good morning. People were surprised to see growth in sales this quarter, but again, the devil's advocate argument is that the real impact of demonetization will be seen in Q4. What's your sense?
Well, I think the effect of demonetization was supposed to come, but I think earlier effect would have been seen more. So we were expecting a higher effect, especially in the month of November and December. I doubt very much that there will be a much impact in the fourth quarter because the businesses are coming back to normal. Cash availability is getting better in the system. So I'm not subscribing to the fact that there will be a big effect in the fourth quarter.
Okay, so businesses are coming back to normal. That's a big positive. Where do you see sales growth coming in from in this particular quarter?
Well, I think definitely there was some impact in the marketplace due to cash drying up in the system. So there was sales reduction, or contractually there was structurally there was some reduction in the sales in the November and December months. Probably what we feel is that there has been some market share gains, primarily from the unorganized sector, which is definitely going to impact even in the fourth quarter and the coming quarters. So definitely we do see some market share gains in many of our product categories.
Okay, can you share the breakup of sales growth in various segments?
The switchgear growth, that has been tepid. That's about 2% growth, and that's primarily because the new build construction has been weak over the last couple of quarters. But overall, if you see cables and wires, strong industrial demand we could see, infrastructure demand we could see. So in cables and wires could grow double digit. Even consumer durables grew at about 18%. Even if you take lighting, though it is showing a growth of 2%, but it also is impacted by the degrowth of 40% in the CFL category. So if we take CFLs out of the counting, which is almost 13% of our sales, the overall lighting growth is also about 22%. So ex CFL. So basically there is a general uptake in the all the segments.
Okay, well, you spoke about market share gains in most categories that you're expecting to see. That is well as a positive. Margins remain higher due to higher copper prices and extra cost to push sales. Do you expect the margins, what is the expectation on margins as we go ahead?
I think this demonetization was a major decision which was taken by surprise in the month of November. So we did take certain actions for the trade so that certain confusions go out of the mind, and they also start seeing the markets very positively. So I think what we passed on to the trade was not so much to pass it on to the consumer, but to alleviate the kind of losses of the concerns which the electrical trade had. So this is, we believe, a sort of a one-time impact, not a price reduction in sales to increase market share. It's a sort of a market one-time impact for the electrical trade, and I think going forward we'll see margins coming back at normal levels.
Okay, how much did the trade schemes introduced during November and December impact your margins?
So we could say that it is close to almost about a 1.5 to 2% impact.
Okay, there's a lot of talk in the market that you would be looking for some acquisitions. Asking you straight up, are you looking to buy either Kenstar or Lloyd at any point in time?
The only thing is I can say that I would not like to comment on market speculation. The company is constantly reviewing its M&A strategy, given the fact that we are right now in the growth phase. We have cash on the balance sheet, and we are always looking at opportunities which could strategically fit into our system for an M&A. As we have always said that we are a brand and distribution oriented company, we would like to increase our portfolio of product categories or brands or geographical reach to an acquisition. So we constantly reviewing opportunities which come through to us.
Okay, Anil, thanks a lot for your time today. That's